From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 17, 2017. In today's video, we're going to take a look at the NZDUSD, the New Zealand dollar, for today's trade analysis. Starting here on the daily time frame, we're looking at history first. We want to look along the orange shaded area in the middle of the chart, right around 70.40, 70.20. So you follow it back in time. I want to go back where the circles are first, because what this is showing us is that this area has been an area of trading decisions before. What I mean by that is this is where buyers and sellers have made interactions. Sometimes the buyers exit and sellers enter. We typically call that resistance. Sometimes the sellers exit and the buyers enter. We typically call that support. Or sometimes there's just a period of congestion when the market just is indecision. Should it go up? Should it go down? Around this same simple area in the mid to low 7,000. So again, you look at the blue circle on the left hand side, resistance is clearly seen there. The black circle right here just to the right of that, we see a little bit of resistance and some congestion around that area. You go back to the next black circle and you see support in that area. And then of course the red circle, congestion. There was some support, there was some resistance. It waffled on both sides of it before finally reversing and going back up. Now let's go ahead and zoom it in on this and take a look at the black box within the rising trend, the black trend line that we see here. Starting from the bottom, you see a little blue box congestion, and then you see this black box right here between the pink and the orange shaded area. Again, the orange zone is 70.40, 70.20. The pink zone is 69.80, 69.60, and we can see support and resistance in there. Of course, if it breaks above it, we know it's going to go higher. If it doesn't, we could be looking for it back down to the green zone. So the reason I point all this out is that's where we are right now. And if you take a look, there are similar trading decisions being made around these areas. The resistance so far for the past 2 days, even after our significant move after FOMC on Wednesday, came to a screeching stop right here in this 70.20, 70.40, the orange shaded area. Then yesterday we found some resistance and went all the way back down to where? The pink shaded area, just like it did the last time we were inside this black box. Now we see it rising once again back towards the orange zone. Over here, it took 1, 2, 3, 4, and again on the 5th day is finally when it broke out. So we've only gone inside this black box between the orange and pink zone for really 2.5 days. We still have potential some more time that we could sit in there if it duplicates that same congestion zone before. Now it doesn't have to, but that's what we're looking for, is for the consistency of the market, resistance and support at similar areas, trading decisions at similar areas. So as long as it's underneath that orange zone, I don't think this is a good time to go long or buy this currency pair. Sure, it's gone up for the past few hours, but I don't think it's a good time to go long. Obviously, if you just look at the past few hours, let's zoom it in one more time, the best time to go long would have been down here at the pink shaded area. And we discussed that as a possibility yesterday, but the caution that we had was because of the fundamentals that we've actually seen over the past 3 days out of both New Zealand and the US. We did get a raise of interest rates for a while. The market didn't view it as positive as we had hoped, and the market kind of viewed it as a cautious stance from the Fed and sold off the dollar. It still was a raise of interest rates, and they're still going to raise interest rates. They're still pointing to that further raises down the road. So that does give us a little bit of a good strong dollar bias. Then we saw some news out of New Zealand, GDP, that didn't come out very well for New Zealand, causing the market to sell off and go back down to the pink zone. So fundamentally, it makes sense for this currency pair to go down. So selling resistance does seem like a viable strategy on an intraday basis, especially when it's at resistance, because it provides lower risk and higher reward. And that's what we're always looking for. We're always looking for lower risk and higher reward. So to do that, we typically look for either buying into support or selling into resistance. Let's zoom it in one more time here on the daily time frame. So that's what we're going to look for today. We're looking for, since we're at resistance and at the orange shaded area, a potential opportunity to go short, because the fundamentals tell us that really that's the direction this currency pair should go in. Now, the risk here is pretty simple. The risk is that it breaks above the orange zone. So if you're on the buy side, if your bias is to the buying because of the Fed move on Wednesday, I'm okay with that. I just would say that you want to do it closer to the pink zone or above the orange zone, above 70.40 is your time to go long. So don't go long now. Just wait for it to either go back to the pink zone or break above the orange zone. Until it does that, one of those two things, I think on an intraday basis, this becomes an opportunity for an intraday short here from the orange shaded area. Let's go ahead and take it down to the 4-hour time frame, get a little bit of a zoomed in view here. And again, this is our area that we're looking at, the orange zone here. And if I bring our black arrows over here, you can see 70.20, 70.40 the other day, even on FOMC. Significant rise. We got the negative GDP data out of New Zealand, went all the way back down to the pink zone. We've seen a little bit of hesitation there and a bounce back to the orange zone. And now again, this becomes our area where we may look for an opportunity to go short. Once again, for the New Zealand dollar, our risk is pretty clear. We don't want it to get above here, so our stop loss goes above the orange zone. We'll target back down to the pink zone, and if the market can become dollar positive, US dollar positive again, then we look for the breakdown of the pink zone and a new challenge of the green shaded area at the very bottom of the chart. So risk is low, potential profit is high for short, and not really for going long at the current moment on the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.